Hello and welcome to iTradeAIMS.com, iTradeAIMS.net, AIMS Stress-Free Trading. This is Imi, the Forex trader, educator and systems designer. I gotta get used to this. So, did you ever get stopped out prematurely? It's a trading thing. From time to time, we, the men, often let it exit prematurely. So what is it, why is it, and how to remedy it? Anesthetic condoms, probably? So did you get out prematurely like this guy? Moi? Objectives of this training session. The first one is what is premature exit? Does this exist in trading life or is it only the normal life? How to avoid it, the right way to manage your trades, and the implications of having a trade plan. So let's begin. This is the story of premature exitulation. No, it's not a word, I just made it up. If you watched my video yesterday, or was it the day before yesterday, or if you were in the chat room, you would have seen that I posted Australian dollar yen trade that I took. You would have seen the following picture. The perfect setup one. Yes, indeed, this is the perfect setup one. Nice, clean wave 3 down. A beautiful sideways horizontal wave 4. Perfect. And when I see this, I get excited. I get my ATM and I get it fired. And I put a pending order. And I probably did exactly that. Heck, I even posted it in the chat room. See, as you can see, this is the pending order. This is the stop loss above this box. Red dot, sleeping gator, tight, purple correct. 3, 4. Can't get more beautiful than this. It was an awesome setup one. I took the trade and it was going nicely. But then this happened. The perfect setup one got ruined. You see this? It's the entry. That's the exit. Just tagged me and then bang, it goes down. When you get the stop loss placement wrong, that's what happens. So what happened? What was wrong? I'm actually going to show you a couple of pictures when this trade got in and I moved my stop loss as well. I posted those pictures in the chat room. Yeah, here it is. I actually posted that there in the chat room. I got out prematurely. Whether you're a man or a woman, nobody likes this. Especially if you're a man. Men don't like this shit at all. Let me ask you a question. There's nothing wrong with getting stopped out like this. But let me ask you a question. Should my trade plan address this situation? Let me rephrase it, or let me repeat it. Should my trade plan address this situation? See what I just did there? What should be the question? I did not say one should question if this trade could have been managed differently. I did not say, man, I should have stayed in, moved my stop loss to a worse place, like moving it further up, because then it would not have been hit and the price would have taken me with my trade into the target point. I did not indicate my unwillingness to follow my trade. The question should have been, did I follow my trade? What should be the question? Instead, I phrased my question differently. I said whether my trade plan has or should have addressed the situation differently. Why? Why not scrutinize my premature exit? This is because I have already addressed all types of possible trade situations that the market might throw at me, and I have made my plan accordingly. So the answer to my question was, when I got stopped out, I looked at the missed opportunity, the profit that I did not take, and then I asked my question, did I follow my plan? To make this argument valid, the argument of whether I should have managed my trade differently, after I have asked my question whether I had followed my trade plan or not, one will need to have seen a recurring pattern of such event, a recurring pattern. It mustn't be something that you saw on a couple of occasions or a week or 2 weeks. Trading is all about pattern recognition and probabilities. So if you see a pattern often enough, create a hypothesis and go on search to prove it. So, for example, if you see that the market starts to move violently right at London Open, and you've seen it many times, that does not validate the argument unless and until you prove it. So how do I prove it? Simple answer. You need to do some backtesting. In trading, market research is simple. We play with charts. We backtest it. So go on and backtest the idea, then forward test the idea. The point is to first find the problem or an opportunity. Sometimes it could be a problem, like in this case when we are talking about my trade that got out prematurely. It's a problem, so you want to find out. And sometimes it's an opportunity, like the example I gave here. Around this. And then find the solution and prove it. Because sometimes a problem doesn't really exist. You see, this is the thing with human psyche. Sometimes we experience things and everyone's different. And depending on your mood, you might think you've seen something. You might think there's a recurring pattern. But you cannot capitalize on it unless you prove it. And because when you do the search or the research, you find out that the pattern is not occurring enough, so it's not really a problem or a solution. So what is the problem of the dummy traders? So when you start to trade and you don't have a clue what's going on, this is a little bit of a story from the past. What do you do first? You consider this as a problem. Am I right? The obvious solution, you think, is to educate yourself, and so you find a mentor, right? Or an online learning portal like itradeaims.net. Yes. A very good website. Or visit forums such as forexfactory.com. That's more about news and stuff, but there's a lot of forums in there. Or a very good website such as babypips.com. If you haven't been there, please go there. It's a lot of education there, especially for beginners. You then start to implement your knowledge and become good at the game step by step, right? Wait. What is the reality? Is that what people usually do? Not really. No. They just buy a crappy signal system or a system sold by some great marketers who give you promises of the results of great trading. Yes, people don't look at the facts and figures of a trading strategy, and that is what is not being sold to them. Or whether the strategies presented are proven and tested. They don't question that. They don't ask, will it help cross that bridge between that point where you are experiencing a problem and the solution? Am I right? Yes. They get the emotional solution. What is the emotional solution? People feel an emotion and then they find an emotional solution. That's what they get from the websites. A promise. A website with beautiful cars, houses and holiday destinations, pictures of all of that and lovely videos. They don't question, they don't stop and say, hold on, I know what you're showing me. These are the end results of, these are the, showing me are the end results of trading correctly. Let me repeat that. So when you go to a website, what you would see is a person sitting in a nice car, a beautiful office, and a lovely house and a holiday destination, showing you his results on a private jet and all that stuff. And that feels fantastic. But they hardly ever tell you about the trading situation itself, that it's hard, that you need discipline, and you need to work on it. So people don't ask it because they have an emotional problem. Trading becomes an emotion for them. They are losing and they want to win. And then they present them an emotional solution. That makes sense to everyone. They never say, what about the actual merits of the actual service? The proven method, the proven strategy that you're going to share with me. Nobody asks these questions. You know why? Because sellers can't teach. There is the art of selling and the art of teaching. Both are two different things. Most teachers don't know how to sell, and most sellers don't know how to teach. And even if they did, sellers can't teach by principle, because if they did, they won't be able to sell. That's the fact. But I digress. Let's get back to the point. So what is the correct question? So the question should have been, how often do I get stopped out because I move my stop loss too close to the price? That is the question I can ask. And the consequence is that price tags my stop loss and then continues to move towards my actual take profit or target point. So how do I address that? I will have to go back, look at my trades, and in my case, I don't have to backtest. I will have to just look at the history of my trades and find out how many times has my stop loss management, trade management, resulted in premature exit. If it's 10%, 20%, which means like 2 times out of 10, 1 out of 10, I don't think it should be a big problem. But I can still find out, if I were to correct that problem, would it increase my profitability or decrease it? You have to do that search. You can't just assume. This question will shape the quality of your trading. Think about it and let me know if you ever thought about trading situation in this manner in the comment section below. And does it make sense to you that this is the proper way of doing things when it comes to trading? Does it make sense? Yeah? So please leave some comments so we can have a discussion about it. Also, have you ever actually written a proper detailed business plan for your trading business? Believe it or not, trading is a business. It's not some game. It's a business. You invest money in it and you try to make profit. And if you don't have a trading plan, stop trading immediately. Because every trade that you take without a trade plan is what we call a discipline zero trade. It is a wrong trade. No matter whether it makes you money or it loses money, it's a wrong trade. If you're a member, then no worries. Head straight to members area and go to the dedicated trading plan section. Let me bring it forward. See this? This is the plan section. So the T20 principle, trading plan template, sample trading plan, and trading plan 2019. For example, let's go there. It will take you to the 5 batches of T20 course sample. This was posted in January 2019, and you can access that. It's all of these pages. This is the end result of weeks and weeks of work that I did, and then all of that trade plan was posted here. So you see, if you need help with trade plan, as I've already said, that it's there. We have a dedicated section on how to create your Forex trading plan. We give you step-by-step guidance on how to create your plan for your trading business. We also have a copy of Imi's trade plan, which I just showed you, and we update it every year. So that's it for me. Hope you like this video. And remember, this does not require hard work. I took the trade and forgot about it. Similar trade that I took the other day, but on this occasion, I did not touch it. I just let it do its thing. But in the case of Australian dollar yen, I was watching it and I was messing with the stop loss a little bit too much. Instead, I should have followed my other trade plan where I just allow the ATM, the automatic trade manager, to manage my trade.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos.